With the closing of the Strait of Hormuz due to the conflict in the Middle East, the ongoing ripple effects are being felt in the markets. At one point, we saw oil surging above $100 US today. It has dropped a bit from that level. We're joined by Ed Yardeni, president of Yardeni Research. Ed, thanks very much for coming on the show.
Sure.
And I know it goes without saying, we just don't know how long-lived this spike in oil will be.
Correct.
What are your thoughts on that? Is there a risk it could be prolonged?
Well, unfortunately, there is. My initial reaction on Saturday over a week ago, when I heard that during the first hour of the war, that Israel and the United States took out the top leadership of Iran, I thought that, well, maybe it'll be a short war. Then I kind of went back and studied what I'd known about Iran and looked into their paramilitary organization. It's part of the army, but it's actually independent of the army. Mm-hmm. And it's a terrorist organization. It was labeled as such. It's the Islamic Revolution Guard Corp, IRGC. Mm-hmm. And they are the ones who have been funding terrorism throughout the Middle East, maybe in some ways around the world. And they're just not going to give up. Now that there's no head, they seem to be operating almost independently and just lobbying drones and missiles at even their neighbors, just creating havoc. The strategy of Iran now is just to create global chaos, and it's done a fairly effective job of that. And the assumption that they're working on is if they create enough chaos, the world will come back and demand some sort of ceasefire agreement between Iran and the U.S. and Israel. That's not very likely. Mm-hmm. So this war may take a while longer, simply because the U.S. and Israel are going to have to do something about the IRCG with their drones.
Yeah, I mean, it does seem to operate as a state within a state. It has extensive economic interests, etc. So it's not just a simple deal of, well, it never would be simple, but of dealing with the leadership as such in Tehran.
Well, as I said, it's a terrorist state within a terrorist state, and that's what makes them so dangerous. Is they're professional terrorists. This is what they do. They have a lot of power within Iran. They own a significant portion of the Iranian economy, and they're fanatical in their beliefs, which makes it pretty hard to just bomb them from the air and call it a day. Anyways, military historians have concluded a long time ago that it's very hard to win a war just from the air, just from air bombardment. Boots on the ground is really the only way to get an eventual victory.
But of course, that has quagmire written all over it. It sounds like something Mr. Trump would be very reluctant to approve.
That's right. So it just could be a continuation of this kind of warfare. And maybe along the way, both sides will conclude that they need at least some sort of temporary ceasefire. The key, of course, is the Strait of Hormuz. It's effectively blocked. The insurance companies won't insure vessels. The United States said they'll insure up to $20 billion, but that's kind of a drop in the Persian Gulf, really, in terms of the kind of money that the owners of the vessels would want. And in any event, even if they're well insured, it's not clear that they're going to want to see their vessels targets of suicide drones.
Yeah, I mean, the danger to life and limb, among other things. You yourself have said that there is a risk of a pretty serious sell-off in U.S. stocks this year. Can you just give us your thinking on that, please?
Yeah, well, Tuesday, a week ago, when I had my second thoughts about a quick war, I suggested that we could have a 10 to 15% correction in the S&P 500. Now, I think it's important to realize that there are differences between what's going on now and what happened during the stagflationary 1970s. Back then, we had two oil shocks. They caused two recessions, but the U.S. economy was a net importer of oil. It was much more energy intensive. The U.S. is much less dependent on foreign oil. As a matter of fact, we are a net exporter of both oil and gas. So the impact isn't likely to include a shortage of natural gas and oil. It's just the price is going to be elevated. And the problem with higher prices could certainly, with higher gasoline prices, depress lower income consumers. And if the stock market remains depressed, it could feed on depressing higher income consumers who have been making a lot of money in the stock market.
Because the U.S. economy is, according to some accounts, pretty energy intensive compared to other developed countries. So there is a vulnerability there.
Well, I'm not so sure about that. The energy agency that collects data at the Energy Department, they have a chart showing energy intensity, and it's down significantly in the United States over the past couple of decades. So our companies aren't net. Again, we've had a lot of movement away from manufacturing to services, which tends to be less energy intensive. Also, the movement to digital in the past was less energy intensive, but now with AI, suddenly we're going to become a lot more energy intensive, and that's why we're building more electricity generating facilities to accommodate all that. But yeah, this is it's a bit of a shock for everybody for sure, and you know, it's hard to see that anything changes in the next few weeks. With the administration saying it could take a few more weeks, and the risk is it could take longer than that.
That's interesting. Yeah, I'm just checking the actual energy. The economic weight of energy has actually dropped in the U.S., and apparently that process really got going in the 1970s.
Correct.
We'd better jump. Ed, thank you very much indeed.
Thank you.
Ed Yardeni, president of Yardeni Research.